How are you?
How are you feeling after yesterday in particular?
Well, yesterday we witnessed the history again, right? The worst single-day loss since 2008 for HSI and HSCEI, not to mention the Nasdaq Golden Dragon Index down 14%. Investors are really frustrated and angry, and they're trying to figure out what to do next. So I think currently no news is bad news. Basically, if we don't see some strong positive catalyst coming out of China, the risk of trade might just continue.
And that catalyst is does it have to, is it COVID zero? That's the big one still?
I think so, yeah. Because looking ahead, what can happen in the near term, right? External environment, the geopolitical tensions, they are not getting better, right? Early October, we've seen U.S. escalating the tech war by sanctioning China's access to the most advanced chips and supercomputers. And markets are expecting more to come on quantum computing, on AI, on other outbound investment. So what can be positive only have to come from China domestically, and reopening will probably be the most important policy.
Okay, so how do you trade it? I mean, do you go by the traditional metrics, or do you have to do something completely different?
So yesterday, the number one request we got from investor was about the foreign ownership data. So basically, investors are thinking that whatever stocks that are more well-owned, especially by foreigners, could be more vulnerable to the foreign sell down, right? From that perspective, we would say, relatively speaking, onshore market will probably do relatively better than the offshore market, right? The value stocks could probably continue to outperform the growth stock, because without reopening, the outlook, the clarity on economic growth, on corporate earnings will remain to be low. So you don't know what is the growth, then you focus on value, right? That's a strategy for the short term. But if we can see pivoting toward reopening, that might be helpful in terms of start to change investor sentiment.
Positioning is one of the components of your wax and wane index, which on aggregate is saying buy, for example. So what is positioning telling you right now about the short-term direction of this market?
For the China A-share market, the positioning is neutral-ish, right? So it's lower than, for example, it's relatively low compared to past 18 months, but compared to the historical low level, it's not that low, right? Similarly, for China A-share valuation, it's cheap compared to the past 5 years, but compared to 2011, 2012, valuation is not extremely low. And I think what's happening in the market is there's a lot of non-technical factors, right? Whatever wax and wane indicator, our global bull bear indicator, these are trading based on the technical factors. But currently, there are a lot of things on people's mind about geopolitical tensions, politics, that's not being able to track by these quantitative factors.
So if the technicals don't matter, I guess valuations don't really matter either at this point. Do we need to subscribe a new playbook for China now that we've seen basically a clean sweep when it comes to the political order? And is it kind of something that's new? I have to look at things like dual circulation, common prosperity. Are those themes that you have to kind of wrap an investment strategy around?
I think for now, market is trying to figure out what is the right framework, and probably for the next few months, it will take time to repair a lot of the confidence, right? Whether it's bottom up, the fundamental confidence of the consumers, of the business entrepreneurs, to the capital market investors' confidence. So I think, the basics are still there, right? We invest for growth. We invest in companies that can deliver continued good earnings growth, right? But for now, the growth visibility is low, so we need to wait for the clarity of that. And that clarity comes from policy clarity. Right, now that the big political event is behind us, I say focus back on policies rather than politics.
Well, policies from the White House as well, and the whole semiconductor and the chip ban. Now that is going to play and have repercussions right through not just Chinese markets, but the economy itself. And if you trade on fundamentals, you know what happens.
Yeah. So currently U.S. is saying the aim is not for a tech decoupling, right? The aim is to protect U.S.
Well, they're going about it the right way, then, aren't they? Right.
So really, if we're talking about about scenario of tech decoupling, it will be hugely inflationary for the whole world, right? And it doesn't help with U.S. recession. It doesn't help with U.S. monetary policy. And for China, we think retaliation is not necessarily the best option for the short term. So, I guess on that front, in the short term for China, hopefully there will be measures to de-escalate some of the tension. There's no expectation currently on the G20 or the potential meeting between Chairman Xi and President Biden. There's no expectation. But there might be a room for upside surprise if the dialogue can start to de-escalate. But also, I guess for China, the strategy will be further enhance its role in global supply chain to make the decoupling more difficult for the U.S., right? But long-term perspective, China does need to emphasize on its technological self-reliance and its self-reliance on many critical technologies, component, materials.
Is there a difference between when you speak to foreign investor clients and domestic investor clients, institutions, in terms of sentiment? Because we know foreigners are largely bearish. We don't know so much about what domestic investors are thinking, roughly speaking, given what's happening.
I think there are shared frustration, right? The weakness on the economy, the lack of visibility on the outlook. I think these are concerns shared across the board. But even among global investors and similarly domestic investors, we see different sentiment among short-term versus longer-term investors. Right. Short-term investor, money who don't have to be in China, money who don't have a benchmark will say, will China reopen? If they don't reopen, we don't even bother to invest in China. But longer-term investor, they would say that China will have to reopen sometime, right? Maybe not next 1 to 2 months, but take a 6 to 12 months view. There will be a cyclical rebound at least. But their concern is more on the long term, the geopolitical tensions, what happens to China in terms of sustainable growth if China can no longer play such an important role in the global supply chain and don't have access to the Western technologies.
I'm looking at dollar China, even onshore is punching 730. Some traders are saying this is some sort of mini devaluation of some sort. How does that impact stocks in any way?
Yeah, historically, MSCI China does have a correlation with the currency, right? Typically, they both reflect the fundamental economy and also confidence for the medium to long term. But also, we also notice that stock market tend to bottom before the currency. So stock market tend to be more forward-looking, whereas currency is more, reflect the state of the fact. Yeah.